This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. So what I like to do on this channel and what I've tried to do over the years is take something that's fairly complex and turn it into something as simple as possible. So dates back to years ago when I was working with a guy who was a professional trader, ended up being an e-mini trader for years. That's how he derived his income. And I spent 6 months trying to teach him how to use multiple time frames. It was sort of surprising to me how long it took him to grasp the concept and how to mesh these time frames and look for confluence. And if I'm talking about a guy who's well versed in technical analysis, he's a very good trader, able to make money. I knew if I was going to try and teach this to other people that I had to learn to simplify it as much as possible. So that's really what I've tried to do with my book and my courses. And, the goal was essentially to take something that is adding in extra pieces of evidence that can improve your odds. All right. But not in a way that makes it so overwhelming because you've got so many lines on your chart. All right. So that's the goal. I'm going to give you an example today of how we can do that. And maybe this will give you a little bit more insight into what I'm doing in my course. So if you have an interest in learning more about this, I would suggest starting with the book, which is at rabilstockresearch.com/book. Also, if you like this content, please hit that like button and also subscribe. Okay, so I'm going to use Costco for this example. I've got a monthly chart in the bottom right, weekly in the bottom left, and the weekly in the bottom right. I've got a daily in the upper right, and then an hourly in the upper left. All right. I do like looking at things in this fashion, this circular fashion. Now I can use the monthly and the weekly together, the weekly and the daily together, and the daily and the hourly together. And I can do it very quickly depending on what I'm trying to find. So most of the time when I'm looking at stocks, I'm starting with this for my the list I put out for my subscribers. I'm starting with the monthly, weekly, because I know if there's an upward bias in the bigger time frames, there's a higher probability to make money in a weekly, daily pattern, which is what majority of my subscribers tend to play, it seems. All right, so let's just go through this, and I want to show what I think are, a few simple things that I've tried to do and show in my book as well as in my courses that will, I think, if we can kind of compartmentalize everything, we can really get it down to the keys of what we're looking for. So let's just look at the higher time frame. I'm going to use the weekly as the higher time frame. As I said, this is a popular time frame for clients. Now, the higher time frame is the trend time frame. This is the time frame that if I'm going to trade, this is the time frame that is giving me the trade. All right. So we've got a trade time frame. All right, that is essentially giving us the trend and or the setup. All right, and then the lower time, that's the higher time frame. All right, and then the lower time frame is the trigger time frame, and that's giving us the entry. It's telling us things are getting ready to get going again. It should improve our timing. It should lower our risk. And so that's really the kind of key, using these two time frames together. You should be able to use any two time frames together as long as they have a 5 or 6 to 1 ratio. All right, meaning 5 to 1, that would be 5 days in a week, right? And there's approximately 5 weeks in a month. I mean, sometimes it works out to be 4. It's close enough. Certainly there's 6 to 6.5 bars to 1 when you look at an hourly relative to a daily. So we want to look for that kind of ratio. All right. Now, what the higher time frame, what we're looking for is strength. That's the first thing we're trying to find. Now, I'm obviously looking at the pullback trade when I'm using this as an example. All right. Now, breakout trades are a little bit different, but I want to use this as an example because I think it makes more sense when we look at it in multiple time frames. So what I'm looking for is strength to the upside. Now, what is strength defined by? Well, for me, it's strength in the ADX and confirmation in the MACD. So we make a move to the upside, and I want the MACD to make a new high, and I want the ADX to make a new high. Now, I did get a few questions about this. 13.8 means that 13 is the DI and 8 is the ADX, all right, the smoothing, all right? So the DI lines are using a 13, the red and the green lines are using a 13 setting, and this blue line is using an 8. And the reason why I do that is I want quicker peaks and valleys in the ADX line, all right? That will give me a much easier comparison when I'm looking at new highs and new lows in price. I want to see better peaks and valleys so I can see if the ADX is confirming or not. All right, so we've got that. We've got this move to the upside that is confirmed here and confirmed here. All right. Now, from there, we're looking at a pullback. Like, I don't want to buy after it's made a big run. I'm looking for it to pull back in the area of the 18. Now, I would prefer if the 18 and the 40 are both rising at about the same rate. All right. Now, that is most of the time what you'll see in a really strong trending stock. Now, when we pull back, there are times where the MACD will cross down over, and you have to make a few modifications to that. I go into that in the course. The bottom line is that we can still take this trade if the ADX is strong, but we might need to give it a little bit of extra time if we've gotten a little bit of overrun in the MACD. All right, so it's still a trade. Now, if you notice, we got a couple other setups. We got a pullback here, and then this was another really kind of orderly sideways consolidation. Not every time you get a pullback are you going to get a corresponding good trigger turning back up on the lower time frame. All right, but in this case, 2 of the 3 gave good signals. This one would have been a little tough. All right, so we've got the higher time frame showing strength to the upside and then looking for a pullback. Now, I do want to point something out. When we made a new high here before this pullback, we did not make a new high in MACD, but the ADX is still showing a significant amount of strength. So what we can do is be on the lookout for another signal in MACD. And if you notice what happened, yes, it made a lower peak here, but then when it pulled back to the 18, this made a lower low, while this made a higher low. So we had a reverse divergence setup. Again, another pattern out of my book and courses that I think can help you in a situation where you think this is rolling over, but in reality, it's really just consolidating into support again. So I still think this was a good trade. I think this was a fine trade, but not necessarily an entry. I'll show you that. And then this was another good trade setup where we had pullback, 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 with good over, we were in a power trend on the ADX. So when we are in a power trend, we're definitely looking for signs that we can enter. Now, when we go to the lower time frame, I just want to point out a couple of things. So this was the first trade that I was talking about. We had the strength to the upside, and then we got our pullback. Now, when we have, and I'm going to pull this up so you can see both together. When we have a move to the upside with strength, here, when we're pulling back, it's not going to register on the smaller time frame because these indicators lag too much. So we have to check out the MACD and the ADX on this part, on the decline phase, and see if there's any strength in the sellers. All right. And if there's strength in the sellers, then we want to be a little bit more delicate about waiting. We're looking for more confirmation for it to get back to the upside. All right. Now, in this situation, this was kind of a harsh pullback. It doesn't really look that way on the weekly, but it definitely showed up that way. It had decent overrun, but more important to me, we had some sellers that showed up that caused the ADX to pop to the upside. So let's just show you this. If you notice on this decline, we had a pretty good decline. I mean, it dropped pretty good. It went from almost 800 down to 700. We had overrun here, but if you notice, the ADX stayed low during this whole period. So we had strength to the upside, but we didn't have any strength to the downside, okay? I'm sorry, when the market was selling off, the sellers weren't strong enough to cause the ADX to go up. Now, in this instance, during this decline, they caused the ADX to climb above the 25 line. All right. So when I see this, I'm looking for a little bit more confirmation. I want green to kind of take over again. And if you notice the way that played out, it never really gave you an entry. It kind of pulled back and took off. It was more of a V bottom type of a pattern. And as a result, I think it would have been very difficult to enter on this pullback. All right. This one went in the zone, came out and tested, meaning it went in the zone between the 18 and the 40, came back out, tested. So we knew we should have been on the ready. Even though this had overrun, we had already made a test of that low and then turned back to the upside. So somewhere in this region, you would have been looking to get long. It didn't actually set up a nice pinch play, but you could have taken the cross back above the 40 in a few different instances. This big green bar wasn't actually a bad entry as well. There were a couple different opportunities. Again, I go in more depth in the course, but to me that was a really good setup because higher time frame showed strength and the lower time frame showed no strength in the selling. This one again I think would have been a tough one because we had overrun, but not only that, we had selling strength. All right, now look at this last one. We had a move to the upside here, and it went to a new high. Yeah, the MACD didn't confirm, but then look at what happened during the consolidation phase. We made a nice double bottom right at the 0 line with very little overrun, and then look at how we had no strength in the sellers whatsoever. Red couldn't even get above the 25 line. So we knew the sellers were very weak, and we could have been looking for a trend line break entry here. Because it made a double bottom in MACD and it was right in the area of the 0 line at that point. All right. So we could have done that. If you didn't like that entry, you had a second opportunity on a higher low, which ended up being a pinch play. So we had a couple opportunities to play this off of a weekly daily, which you would have already hit a target, maybe 2, and you'd be at a break even at this point and seeing if this wants to continue to the upside. All right. Now, when there's earnings coming, you might need to protect those, protect your profits or protect your current ownership of the stock by, I like to use puts. I will buy a really cheap put where my stop would be. And if the stock has a big gap down, I know that I'm going to get that stop. So if I'm going to break even, let's just say I'm here and I buy the 925 puts or something like that, and they're pretty cheap. If I can get them cheap enough, then I'll do that. And I will buy enough to protect against any kind of a decline so that if it does gap down, let's say down to here, I know that I can exercise and sell that option at this price right here. So it's basically protecting my stop. All right. As long as it's not too expensive, I think it's not a bad way to go. I typically only do that on monthly, weekly trades, but if a stock has made a really good move and it's moved far enough away from your stop, I don't think it's a bad idea. It all depends on how expensive they are. So this is the bottom line. What we're trying to do is find strength on the higher time frame, confirmed by MACD and ADX, and then weakness on the pullback, showing no strength in ADX or MACD. So if we can separate these things out, I think it can become a lot more simple. What I've defined in my course is the most difficult part of this is learning the 4 different entry signals that can develop, the trigger signals. There's 4 different types, the way they can play out. It's the only real thing that I think is a little bit more complex. It takes a little bit more time, but I have plenty of subscribers that have proved to me that they can learn this approach and apply it on a regular basis. All right. So I hope this helps. Let me know if you have any questions. Thanks.